What's going on, everyone? It's Stock Picks by Tim, and in this video, we're going to go over Michael Saylor and Bitcoin. We've got a recent rumor that's been circling around saying that basically if Bitcoin goes down to 20,000, Michael Saylor will get margin called and deal with some potential issues. So we're going to get into that. We've got an interview that just dropped, and I will leave you guys the link down below if you want to watch the full thing. And all that I ask is you hit the like, subscribe, ring the notification bell. Definitely helps me out. It helps me out in the algorithm, and I appreciate each and every one of you. Now let's roll this first clip highlighting Michael Saylor's thoughts on this $20,000 margin call.
Michael, there's been some stories recently. I think Fortune ran with this one. If Bitcoin falls below 21,000, there might be some form of margin call over at your company. What does that mean? Help us understand, like, what does happen if crypto continues to fall?
That's all FUD. Look, we started with $5 billion of unpledged collateral. We borrowed $200 million against it. So that's a loan to value of 4%. If Bitcoin fell 95% from that number, then we'd have to post additional collateral. People got their hands around the fact that we would adjust some collateral if Bitcoin ever got to 21,000, but it's really a non-issue whatsoever. You can think of it as like leverage of 1.04. If I was levered 10 to 1, we would have borrowed $50 billion against that collateral, but we borrowed $200 million. It's really it's a nothing issue.
And there you have it. According to Michael Saylor himself, that was all just FUD. Now I'm curious, do you believe him? Do you think he's full of crap? Let me know in the comments below. Now I also wanted to feature this other portion here. He talks about Terra, Luna, and the algorithmic stablecoin UST.
There's a bunch of imperfect things. There's the stablecoin, the USD, Circle, and Tethers, and BUSD, and et cetera. Everybody wants a stable US dollar. They're struggling with how to do it in a compliant fashion with transparency. Then there's a lot of dangerous things. There's 19,000 dangerous things. It's basically all the unregistered security crypto networks running on proof of stake that have active management, project management teams, that have ICOs, that have some centralization in them. And Luna and UST was an example of one of those crypto security tokens that was mismanaged, and it blew up. And what's going to happen is an entire generation of crypto people are going to get educated on why Bitcoin is the superior asset. And then a bunch of regulators are going to accelerate their regulation of stable coins and accelerate their regulation of the crypto security tokens. And the winner of that entire exercise is Bitcoin, because once people figure out why Bitcoin is superior to everything else, then the institutions are going to come in with large sums of money. And we're not going to have to struggle through this mess of explaining why we're different than 19,000 other crypto tokens.
And just quickly, Michael, just to be clear here, you traditionally have been sort of a Bitcoin maximalist, so to speak. So to be clear, you weren't invested in things like Terra or Luna. Are you in any of the stable coins?
Well, first of all, I'm not even sure. Luna is not a stable coin, but we wouldn't invest in an unregistered security. So 99.9% of everything in the crypto space is an unregistered security. And I might invest in a registered security one day. I mean, if you ask me would I buy Apple stock or Google stock after reading the 10K and 10Q disclosures, maybe, maybe not, but that's not our strategy, right? But I really don't think that any public company or public investor can invest in an unregistered security. That's venture capitalists. So no, we're not invested in it. It's pretty obvious that they're all unregistered securities. And I think the crypto industry hasn't really addressed that issue. That's the elephant in the room. And the Luna Terra meltdown has actually brought this to the forefront. And now I don't think people can ignore it.
And of course, it all circles back to Bitcoin. I mean, this is Michael Saylor that we're dealing with. Are you surprised? So I do find it kind of interesting that he says that all other cryptos are basically unregistered securities. I would argue that that's kind of just a broad brushstroke because essentially the SEC has ruled that Ethereum and Bitcoin are not securities because they are decentralized with no person or company in control of the cryptos. So I'd argue that there are other cryptos out there that would fall under this definition, but there are also cryptos that don't fall under this description, ones that are not decentralized and ones that just have too much ownership by one person, by venture capitalists, things of that nature. Definitely very interesting stuff. Of course, typical stuff a Bitcoin maximalist would say. Now in this next part here, I'm going to leave you with Michael Saylor's thoughts on regulation. Thanks so much for stopping by, everybody, and I'll see you next time.
What type of regulation do you expect to come over the course of this year, as we've increasingly heard Bitcoin and broader digital assets discussed acceleratingly in Washington, and how does that impact where you would add on to your existing crypto positions?
Okay, well, first of all, we won't add on to crypto positions. We will add on to our Bitcoin position whenever we come into excess cash. And that's a very simple strategy. With regard to regulation, there's been a deadlock in DC and on Capitol Hill around stablecoin regulation and around security token regulation. I think the administration wanted to move faster. Congress was moving slower. I think that that this meltdown of Luna, UST, that's going to accelerate the regulation of stable coins and security tokens, which will be a good thing for the industry.
Now, real quick, I wanted to also throw in this part about Michael Saylor talking about price.
And Michael, finally, getting back to price for just a second here, do you think that Bitcoin will remain sort of in the doldrums as long as the Fed is in a rate-raising cycle?
No, I mean, I think that clearly Bitcoin's been drawn down with all the risk assets in this deleveraging tightening cycle. But you know, there are also the crypto crash issues and the Luna Terra impact. So over time, I think as people get educated and as they get more comfortable, I think we'll recover from this drawdown. You know, Fed policy is very difficult to opine on or to predict. And so clearly they have a huge impact on how people value all assets, depending upon what they say from day to day.
Michael, we certainly do appreciate the time here discussing not just your own holdings, but the broader landscape as well. MicroStrategy CEO Michael Saylor, thanks for the time.